presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Mike in Wilmington. Hey, Mike, what's going on?
Hey, Tommy. How you doing, buddy?
I'm doing great, man. Yourself?
Good, pal. Good. I'm calling to give you a compliment because I just want your listeners to know that you are on your game right now. I've been listening to you for a lot of years, Tom, and you were on your game. And I'll tell you, I'll never forget you calling King Dollar back when it was in the 70s. You saying it was going here, and everybody couldn't even believe that it could even dream that it was ever going to go back to the 90s.
I appreciate the feedback, man.
All right, pal.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Be yourself around others. Don't make assumptions. The biggest assumption that humans make is that everyone sees life the way we do. We assume that others think the way we think, feel the way we feel, judge the way we judge, and abuse the way we abuse. We're afraid to be ourselves around others because we think others will judge us, victimize us, abuse us, blame us, as we do ourselves. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow Industrials down 51, Nasdaq off 23, S&P's down 6.5, gold contract up $5.60, trading at $1,353 an ounce. Silver off a penny at $19.83 an ounce. Platinum up $8, $1,119 an ounce. Copper up 2 pennies at $2.18 a pound. Light sweet crude up 92 cents, $46.66 a barrel. Bonds, the 10-year note down 8 ticks, 132 even. 30-year bond off 21 ticks, 171.03. King dollar down 834 ticks, trading at 94.76. The euro is at $1.12 and the yen is at 100. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? You got a sideways market out here. Your SPY is down 70 cents with light volume. You get 39 million shares. It's going to need a lot more than that to get into lower price, folks, and stay into lower price. We'll see how this shakes out coming into the close and see if it can kick up into that 60, 65 million. Right now, it doesn't look like it's going to. Now, that being said, different ball game with the NDX 100. We take a look at, well, first, let's take a look at the NASDAQ composite. This baby is coming down. It's subtle, but it's coming down with big volume. The NYSE, thus far, you're only down 24 bucks. We've already done 1.2 billion. That's going to line up about 1.8, 1.9 billion when all these highs up here have been 1.5. So bottom line, you got some juice in the NDX1, in the NASDAQ composite, as well as the NDX 100. The Qs are down 44 cents. We're trading 9.6 million shares. You made a high yesterday of with 11.7. We're going to do more than that. Now, this also has to kick in with a lot more than 11 million. Bottom line, 15, 16 million, and a close under $117.21. That's what it's going to take. And right now, you're not under that level. You're at 117.25. Small caps. What do we have with the small caps? Small caps out here. Backing down. Volume's not bad, 14 million shares. The small caps are also going to need more volume in order to stay at a lower price. Gold contract. What do we have with gold? Gold contract out here today, folks, has done 211,000 contracts. You reached a high of $1,364. You're trading at $1,353. Couldn't handle higher price. You're coming into, the thing that's amazing is that, so last Friday, folks, we also got to 1362.50. You did 240,000 contracts. Now, the 240,000 contracts was going against the downdraft that had been created out here on August 5th. We had 223. So you pushed into that area, had decent volume, we didn't hold price. Well, guess what? We did the exact same thing today. Gold has a problem holding price, folks. What does that set up? That sets up a run down to the 1342. More than likely what I think we're going to see is they're going to run down to this 1288. And what we do have is that the longer that the markets themselves hold up and the metals hold up, the faster and more violent this move will be to the bottom. And that's kind of how we're shaking out right now. And it looks to me like the S&Ps, the NASDAQ, the metals, they're not going to move lower until they all want to move lower. If we take a look at the silver contract, also had high volatility out here today. Silver had made it up to the $20.12. Gave it up in price, gave it up in volume. Silver's looking to trade down to the $18 to $17.75 area. King dollar. What do we have with King dollar? Just the opposite. Okay, so we had with King dollar overnight. What you had is this, folks. The yen went under 100 overnight versus the U.S. dollar. As that was happening, our U.S. dollar went down and traded to 94.38. But guess what? It was fast price destruction, no volume. Bottom line, as soon as our markets woke up, it started going higher once again. So what it's done now is that you traded down to 94.38. You've done 28,000 contracts. You're actually going into the 24th of June where we had 60,000 contracts. 94. It needs to get up into 94 to get back in the higher range. But the volatility inside the currencies, inside the metals, and now let's go to the bond market because it was all there, and they, bottom line, all turned around and just went the opposite way of where they had been at 830 versus 832. So 10-year note. Now, this is going to be a problem. This is going to be really wild. I mean, because I haven't seen the notes or the bonds do an ABC down in years. And what we have is this. Now, it hasn't broken the B point. The B point on this structure is 131.29. The volume characteristic is 1.2 million contracts. Well, we've already done 1.3 million contracts. So what I expect you're going to see here, you're not going to break it today. I don't see us breaking it today. We'll see whether it gets enough juice tomorrow to, in fact, break it. The A to B equals C to D. I'm looking for this right now. Sorry, folks. I know Tommy and I had this morning. I figured this out this morning. It goes under the actual break top side of June 24th. That level there is 130.21. But with that saying, and this is where the twisted scene came in. The twisted scene came at 8:30 this morning when the New York Fed Chairman Dudley, bottom line, said, hey, listen, he thinks that markets themselves are not counting in that they very well may go up in rates in September. That's a live meeting. Little volatility, little yapping that chap, no doubt about it. You stay right there, folks. It's Tom O'Brien. This is TFNN. Dow Industrials right now down 58. NASDAQ off 24. S&P's down 7.5. We're going to bring it back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 58. You get the Nasdaq off 24. S&Ps are off 7.5. And as we do each and every Tuesday at 20 past the first hour, we have our man, Mr. Basil Chapman. And don't forget, folks, Basil does a great show right here every trading day, 11 to 12 Eastern Standard Time. Now, you can get all the programming at TFNN right on your cell phone. You just put TFNN.com in your browser, hit Tiger TV. You're going to get some great HD video as well as audio. Now, when you come over to our website at TFNN, you're going to see 6 o'clock tonight. We get a big deal happening. New highs to come. A 90-minute live event with our man, Mr. Basil Chapman. Bottom line, this is a subscriber event. You can be a subscriber right here, right now. The way you do it, you come over to our website at TFNN. You test drive it. You can test drive it for free. You come into the workshop. You're going to get a great workshop. You're going to get a great newsletter for a full month. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great, man. Yourself?
Very good. Thank you.
Cool, man. So let's walk them through first what you're going to talk about at this workshop tonight.
Okay. The areas that I wanted to cover, and I'll be doing that in the first part of the webinar.
Okay.
These are things that I don't usually do during my program. It's so different that I really think it's more for subscribers because they understand, because every day they'll be getting the information, so it builds. So it's something that they are following with me all the time. So
yeah.
I'll be talking about the socio-political, economic aspects, the parallels with other eras that we're in right now. I call this a period where up is down, everything is topsy-turvy, all the norms that we are used to have changed. There was a period like this earlier in the 1900s, and this is something that we are matching. I'm going to be talking about the chart patterns. You're looking at the chart. There's some very specific things that I had to wait for,
okay.
And they are coming about. In fact, if you remember, I've been talking about this chart. I've got it right now. This is a long-term chart of the Dow. Goes back, I could make it go back further, but for my purpose right now, I'm showing that it goes from 2007, the high at 14,198, down to the low in March of 2009 is 16,469. And then it shows a series of Chapman wave notations, but it also has something else. It has Elliott wave. And this is a chart, I've got the notation exactly from the 6th of March of 2015. I gave a webinar. In that webinar, I said I'm expecting that we're going to have higher highs and that this is wave 3 in Elliott and that we will have wave 4 coming, which will be a sharp decline. And then the moment we cross whatever the high is in the Dow at that point, and the Chapman wave, it turned out to be a peak G. It's unusual. Whatever that peak is going to be, remember that was the high of 18,351.
Okay.
I said, if we surpass that, even by 1 penny, that's the way this waveform works in the Chapman wave, my suspicion is we've begun a new up move. And even though we could have some violent down moves on the way, we should make higher highs. Well, subsequent to that, we made an 18,351 high in May of last year. We pulled back very sharply. We pulled back 1,000 points to, we pulled back 3,000 points to 15,370, and that was in August of 2015. Then we ran up and we came back and we successfully tested without breaking that low. And that to me was 4 in the Elliott wave, but it was actually a single leg down, which can be very powerful in the Chapman wave. If you look at all of these moves down, they've just been either 2 troughs to the downside or 1, and then the market went higher. So we made a high above 18,351. We got there the other day. If I can see if I can get that chart right there, we made a peak E. If today there isn't a new high, well, you never know. 35 minutes to go. These days, you never know. We could try to do it. But 16,668 was the high yesterday. So I'm going to be putting the whole thing together, both technically and in together with aspects that are parallels with other periods. And I've called this the start of what I call the coda period. It's the final acceleration period, which tells me that we should have, at some point, we're probably going to get a very sharp, now time is of the essence, so a very sharp, swift, and pretty powerful down move, and then we should start moving higher. So the reason I say that is in the Chapman wave methodology, we made a new leg C. And for those who know anything about the Chapman wave, we're always looking for at least 4 peaks. And that suggests that we should still go to a leg D. That means you'll make a peak C. You cannot do that.
And that's on the monthly.
Now.
Yeah, you're talking the monthly. Yeah.
Now, this is going to be interesting because you have to wait a full month before you get the peak because it's a monthly chart. So
right.
We've already in August made a new high. There's no way you can make a peak C until the last day of September. And then you have to wait until October at the soonest to be able to get leg D. So I'm expecting that D will form. And the interesting thing here that I'll show tonight is that the S&P is lagging by 1 letter. It's only in B. And that suggests that we've got higher highs to come. Now, there are other techniques that say how high. The most important thing is it's nice to know, at least in this methodology, that there should be higher highs. What is really interesting, I'm going to be going through the charts of the Excel, the utilities, the commodities, the dollar, gold, in monthly charts. I'm looking at the big picture and I'm trying to give an overview because all the technical icons that I've been looking for have all been falling into place. And what's very interesting about this, even the S&P, look, the weekly chart is still in leg D, and look how strong. This is the MACD, the moving average convergence divergence, and that's the stochastic at 98%, 98.4. It's 1.6 off 100%. That is really high. The longer that this particular index can remain in the 90% area, the greater the chances are that there won't be a sharp pullback, that you will go to higher highs. As soon as it starts to break down, we've got to be careful. And the monthly chart in both the Dow and the S&P are improving, but they're not overly strong. So it's going to, I was saying to subscribers this morning and yesterday, we needed about 150 points up for the MACD in the monthly charts to really give some good readings. So that would be in the S&P the equivalent of about, from here, about 15 points or so. So this is really timely because here we are at a potential turning point, at least short term, in almost all the indices. That includes the QQQ, which is at a PD. You remember we wanted to look for Ds. You just got your D.
Yeah.
Technicals are still quite good, but they are turning down. I mean, I can go through the different sectors, the SMHs. SMH has an alternate count, but the technicals are starting to fail a little bit, and the price is moving high, but it's kind of struggling. Look at that straight up move in the weekly. So I think we're getting ready for some kind of a consolidation. How we deal with it, what are the stocks that we want to be looking for to either add to our positions or to start fresh? What are good shorts coming up? Fabulous. Perfect timing for this particular webinar. And we're going through all the different sectors. As I say, currencies, commodities, the sectors within the stock market. We'll be looking at the longer term, but then, of course, I'll also do the shorter term to look out for the more shorter term, intermediate term technical. So I love the fact that it's a perfect opportunity for doing something like this.
And folks, the way you come into it, you come over to our website at TFNN. You're going to see right in the top of the carousel, new highs to come, a 90-minute live event with our man, Mr. Basil Chapman. It is tonight, 6 to 7:30. You can sign up. You can have a great newsletter for a month. You can get a great workshop tonight. And if you can't make it live, folks, remember that we can keep it on your page for a full 30 days. You can go over it as many times as you want. Basil, you have a great night, a safe night. And, of course, we look forward to the workshop in a few hours.
Thank you very much, Tom. Have a great evening.
You too. Thanks. Bye-bye. You stay right there, folks. We're coming right back. Dow Industrials right now are down 53. NASDAQ's off 23. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow right now is down 54. You get the NASDAQ off 23. And when you do, just take a look at, this is really a sideways move. Dow's off 0.3%, S&P's 0.3%, NASDAQ 0.4. Now, that being said, what you want to keep your eye on as we come into this close out here is what type of volume that we do get in these indices. Now, the NASDAQ's going to have big volume. The NASDAQ's going to come in about 1.9 billion. That is saying that they're unloading NASDAQ stocks in a big way. The NYSE, different ballgame. The S&P, rather, different ballgame. We'll see. What does happen in the NYSE and the S&P is that can do, 100 million in 5 minutes at the close. Right now, you're at 504 million. I suspect we're going to do like 770, 780, but it's not a blowout as is the NASDAQ. So the NASDAQ is something you want to keep your eye on because that would be the first indice that will come off the highs, subtle, and you have the volume behind the move. That's because that's a different ball game because if we go over and we do take a look at the NDX 100, now here's some divergence. So the NDX 100, the Qs, have done 10.2 million shares. That's not enough either. It's just not enough. We did 11.7 yesterday. Doesn't mean we won't have enough going into the close, but you want to see that thing up at 14 million. And I don't see this thing doing 14 million coming into the close. So your next benchmark out here would be can it close under $117.21? We'll see where that shakes out. But that's how that's laid out right now. If we go over to the metal market, what you do have inside that metal market is that the 13F filings came out last night, and you want to see distribution. Go look at Barrick Gold. Barrick, huge run up, beautiful run up. Guess what? This is distribution at highs, and very subtly you're getting just a little bump up on volume as you're getting a little bit lower. And what that's all about, folks, is that good old George Soros, bottom line, made a great trade. PHDC bought it pretty close to the bottoms, and got all the publicity going that he doesn't even have to get it going. Everyone does it for him. And bottom line, he unloaded 18 million shares as of June 30th. I suspect the rest of those are gone too. Now, what you do have, and I've been hunting this one today, I can't figure out, Soros is an easy mark because I've been following for a long time. In Newmont, though, someone's unloading Newmont today. Newmont is only down 47 cents, which is nothing, okay? Bottom line, though, the expansion of volume is something. We've already done 6.2 million shares. You're coming into a swing point with 7 million. This will do 7 million. So someone's laying into this equity out here today. And, of course, depending when they bought it, we'll see. Yeah, and I want to thank Duffy for bringing this up because this started yesterday. So check this out. Anglo Gold, Anglo, AU. This started laying into it yesterday. The high in Anglo, it was established August 4th, $22.91, 2.7 million shares. We come off that down yesterday with 3.8. Today you get 3.5. They're selling that baby away. And, we'll see how this does shake out. The intriguing part here, inside what happened, if you were in front of a computer at 8:30 this morning, even from between 6:30 and 8:30 this morning watching the market, folks, it was wild because the gold market was up big, the dollar was down big. In both cases, though, there were no volume. So in the gold market, it was acceleration without volume, dollar downtown without volume. Both of them, bottom line, turned on a heartbeat. The thing that's wild, it's like, how does this work? How does the market know that the gold in particular has been trying to get over this level for a long period of time? Can't make it. And it's like, okay, jam it up, and guess what? The Fed chairman comes out, the Fed governor comes out at 8:30 and just jams it down, And, we'll see whether the yapping does anything. Right now, if you're WIRP. Right now, the Fed Fund futures are still saying that it's not even close. In fact, it's coming down even more today. So the way this Fed Fund future is, people, basically are taking each side of it. And this morning, the September probability of a hike was 25%. It's at 22 now. December, it's at 52. And in fact, this is the first time I've seen for a while that starting in December, then all of 2017 is in the positive. And you know what? That might have been just a trial, pushing it out there saying, okay, we're going to go up a quarter point. Want to see how bad the reaction is to the marketplace. And, bottom line, if they do go up a quarter point, I don't see a huge reaction. I suspect what the next thing they're going to come out and say, if you remember the first time that they went up with a quarter point, first they were saying that they planned on going up a few times. Then when they were getting closer to actually doing it, they start pushing out that maybe it's a one and done. And that's what it ended up being, a one and done. They did one, and that's it. And that won't kill the market. That won't kill free money. Bottom line is that we still are at 1.57 in the 10-year. And if we bring this back a year, if you want to see the correlation, is pretty intense. So for the year, the low for the year was 1.358 on the 10-year. The high is 2.344. So you can see percentage-wise how much more that you can actually go up on the 10-year without really, that we still, bottom line, have some free money out here. Some of the high-volume stocks, let's go take a look at the high-volume stocks out here. You have Chesapeake Energy up 35 cents. Haynes Celestial is getting killed. That's down $13.74. You have Twitter up Twitter's down 41 cents. We have Morgan Stanley up 62. You have Kinder Morgan up 48. We have Advanced Micro down 16. We take a look at some of the Dow stocks. You get Exxon up 25 cents. Caterpillar is up 14 cents. You have GM down 10. Big Blue is off 87. 3M is down 113. Ma Bell's taking a hit out here today. Ma Bell's coming off the highs with volume. That's, Ma Bell has done 25 million shares today. And if you want to see, basically 6.5 hours taken back till June 29th, Ma Bell's doing it. Let me see if Verizon, VZ, if it's all the phone companies are just, yeah, Verizon. Oh, this is interesting. Let's look at this. It's not an ABC down, but it's breaking a B point with volume. That's Verizon's doing. Verizon had already hit a high of $56.95. You're at $52.96. And I get a feeling this is back in the other range. Yeah, okay, so Verizon just tucked its head back in. It's a failure. It's a failure. It got over the highs. It got over the highs on a monthly basis in March, and now it just came back inside. That's a problem. That's a big problem. You stay right there, folks. It's Tom O'Brien. This is TFNN. We are going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And if you want to see how we continue to stay at highs here, so check this out. Investors continue to scoop up U.S. stock and bond ETFs with the Brexit shock in the past and overseas central bank trade fizzling. Investors are looking to the U.S. for returns. The breadth of the U.S. appetite inside the 3 ETFs, so this is pretty intense, by 3 ETFs making the overall top 10 list. The Vanguard S&P ETF, that's VOO, took in, now this is just in August, folks, so we're, August 16th, took in $1 billion. The iShare S&P ETF, the IVV, took in $678 million. And now this is really pretty strange, actually, when you look at it. The one that I'm more used to than anything, which is a SPY, took in $498 million. And I can see the context how these Vanguard funds are taking over everything. Because look at that number again. So the VOO did $1 billion, where the SPY did $498 million, and I think they're the same thing. Let me just look at this. The VOO, yeah, it is. And what it is, no, that expense ratio is still 5/100ths SPY. Oh, I see. So yeah. So check it out, man. Yeah, the VOO. Thanks, Duffy. Yeah, in a huge way. The VOO has expenses of 0.050, where the SPY has expenses of 0.95. So bottom line is that Vanguard fund, man, VOO, that's Vanguard must be they're taking all these people apart. There's no doubt about it. Because if you were in the market and you're just going to buy ETFs, there's no reason to pay anyone. That's the bottom line. If you're 30 years old, you're going to be in the market for 30 years, great. Just buy the SPY and see you later, man. I mean, that's the bottom line. Pretty amazing. Our phone number is 877-927-6648. Yeah, let's go look at Johnson & Johnson, too. So Johnson & Johnson, which has been on fire, this had quite an expansion of price big time. Now, this baby's also coming down with volume. Johnson & Johnson is down $1.81 today. 9.6 million shares. That's after making a high at 7.1. And if we bring this back a little, 121. This is going to be a problem for Johnson & Johnson. You had a nice breakout on the week of July 1st, and now you're back inside that breakout. That breakout is $121.54. You're at 120.50, so it's saying, hey, that can go to the bottom of the breakout. What you don't want to see, which Johnson & Johnson just set up, is that you consolidate. After the consolidation, you take off topside. Now, this works the same downtown, but I'll talk about topside first. You have a consolidation. You break out, you go topside. If you fail, and let's say you step there 2 weeks, 3 weeks, 2 months. When you fail and you go back inside the range, oh man, you're going to go all the way down the other side. Now, that's when you break topside. When you go downtown, this is the ones you want to be all over. You go downtown, you consolidate. You do that one last dive down or maybe two, and then you get back inside the higher range. That can be a very solid low for a long period of time because it's a total flush out. That total flush out has all new ownership. That new ownership, of course, is in what? Is in equities, or currencies, or commodities at a much lower price. That's how that shakes out. If we do go over to the commodity market, we take a look at the commodities out here today. Gasoline is up 1.8%. Crude's up 1.7%. Now, crude's coming right into, crude's at ice. We'll go through that, but crude is at ice. Cocoa was up 1.4, is up 1.4. Sugar's up 1.4. Lean hogs are down 4.2. You have corn flat. Gold's up 0.3. Let's go over to the crude market and take a look at crude. So crude's trading at 47.23. 10:30 tomorrow morning, numbers come out. And this was failing this morning. Bottom line is that your number, ICE is set up, the top of ICE is like 48.37, and the bottom is 47.40. So we're right at it. Actually, 47.10. You know, we are right at it. That's what we're laying out right now. If we go take a look at Lockheed Martin. Lockheed Martin right now, LMT, this is down 11 bucks, trading at 255. What the heck is doing this? This is wiping this out. Yeah, you never want to see this happen, man. Let's see. So, Lockheed Martin. This is a one-way trip on the way up. Man. You don't see too many defense contractors almost parabolic, but this stock it's not parabolic. So a parabolic move, folks, is that if you take an angle and it's over basically 45, 48%, 50%, it's got to be over 50 to 55. This is like about a 45% angle, and that's not parabolic. But what you do have is that this is a straight line move from 86 to 266. This is, so you're pulling back, you get monster volume. This is going to take quite a hit. I mean, the next leg down is 234, you're at 255. We'll see where this ends up going. The cool thing here, though, this is where it's going to be pretty wild. 54 million shares. Oh, look at this. Okay, so check this out. You may have, we haven't heard this for a long time, but a blow-off top, folks, this is what a blow-off top is. So when you get, you want to see volume when you're taking out swing points, okay? Because then you get more buyers. What you don't want to see, and it's really, you hardly ever get it, is that a blow-off top or a blow-off bottom. And the definition of that is when you do approximately 10 times the amount of volume that you normally do in a day. Well, guess what? That's what it looks to me that this did on a weekly basis. Last week, this did 54 million, and it normally does 5.8, 3.7, 5.9. This did this on a, it did it on a weekly basis, and that's a problem. So fundamentally, I'm not sure what the problem is here. Lockheed Martin tumbled the most in 6 months after disclosing that a $4.6 billion spin-off of its information technology division would provide less a boost to earnings than investors expected. Well, there you go. Shares of the bottom line is that they miscalculated. That's a big miscalculation. So you're going to see some heavy downdraft in that. What do we have? 10 minutes. Let's go look at that composite. I think the composite's going to lead. It is. The composite's going to lead, man. We're going to do 1.7 on the composite. The composite's going to tug them down, baby. Here we go. This is Tom O'Brien. This is TFNN. Dow's down 62. Nasdaq's off 28. S&Ps are down 7.5. We're going to be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is down 67. You get the Nasdaq off 29. S&Ps are down 8.5. And don't forget, folks, our man, Mr. Basil Chapman, is going to be doing a great workshop tonight. You can get in that workshop. Come over to our website at TFNN. See right in the front. You get a great newsletter for a month, 6 to 7:30 Eastern Standard Time tonight. Check it out on the front page of TFNN. We take a look at the ETF structure. And what does get interesting here? I got to do this. I'm going to go with the VOO for a second, too. Because this is going to get... So the VOO, check this out. So the VOO made a high yesterday of 1 million shares. You're off now at 1.6 million. You're coming into 1.7. Okay, this is going to get interesting, man. So the reason I'm going to this VOO, you saw the statistic. So the statistic, this is going to be crazy, man. This is going to be something that all traders are going to have to start really paying attention to. And what it is this. Let me see so the VOO is taking in twice as much money in the aspect of 16 days as the SPY. That's a heads up, man. That's a big heads up. So the SPY, so the SPY made a high yesterday with 49 million. We're going down with 45. The VOO, which right now has twice the capacity of bringing money and made a high yesterday of $1 million, and we're down to 1.6 million. That's a good deal, man. Oh, man. Okay. So the homework tonight, man, is that I got to get the rest of these Vanguard S&P numbers and take a look at the ETF structures inside this, because it looks to me that the Vanguard numbers themselves are going to start blowing away the SPY, which, has been out there and happening for quite a while. But that number is quite a big number. And when you're talking about taking twice the amount of money in 15 days, that liquidity and that equity is the number that you definitely want to look at, meaning when you look and saying, okay, where is the demand? Is the demand from the buying or the selling? You know what I'm saying? And that's, things always change. Things are always the same in the market, but guess what? Things always change. And what you want to be looking at is the largest and most liquid to get an understanding of where you think the supply and demand is at any certain place in the marketplace. And it looks to me like that number that was coming in from the Vanguard is, in fact, accelerating that number. Now, the volumes are totally less right now, that's for sure. So the amount of selling would still be less, because when you look at the characteristic, it's, the SPY is doing 45 million, where the VOO is only doing 1.6 million. There's no doubt about that. But that being said, what is important is that if that trend continues, that the VOO is taking twice as much money in as the SPY, it won't take long that whole characteristic changes in spades. Let's go over and take a look at the NQs, because the NQs are the ones that are leading this baby down. So the NQs are going right after their lows right now. The NQs are the futures. We're at 47.98. 47.96 is the low that was established out here at 9:40 this morning. It's going to go right after it. So that first get-go down, it was 4,800 was an ABC structure on the way down. Now the kicker is we just broke the 4,800. You stay below that, man, you can get out another 25 points. It's not going to happen in 2 minutes. But we could be right there tomorrow morning. Pretty easy. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back, of course, with some numbers for you. We're going to be coming back with our man, Mr. Andy Hecht. And, of course, don't forget, we got our man, Mr. Basil Chapman, 6 to 7:30 tonight, doing a great workshop for you. Check it out on the front page of TFNN. Stay right there, folks. We're coming right back. Welcome back, folks. And needless to say, we are in the lightning capital of the world. And that was the first time in 10 and a half years we've been in this building that we actually got hit with probably a lightning strike and took the whole electric down the building. But guess what? We got back up. Andy Hecht, you there? Not yet. Okay, we're getting him back. That's a beautiful thing, man. I'm telling you, folks, if you come to Tampa and you're on the beaches down here, if they tell you when lightning's coming in, well, get out of the way, because it's a real deal around here. It's still outside, but bottom line is that we made it through it, which is a beautiful thing. No two ways about that. We are talking, and folks, don't forget, tonight, if you'd like to come to Basil's workshop, you can come over to our website at TFNN, sign up right in the front page. Bottom line is that you're going to get a great workshop. It goes from 6 to 7:30. You get his newsletter for a month. You can test drive it all right on the front page. And, of course, don't forget, right after my show, we get our man, Mr. Andy Hecht, coming up. What we did get out here today is that on the NYSE, you had 749 million. That's not enough. You need a higher volume characteristic on the way down. NASDAQ, we did 1.6 billion. Now, the NASDAQ had it, okay, 1.695 billion. The NASDAQ's been doing about 1.5 billion, 1.61 billion as we've been going sideways. So you get that little drift on the way down. We'll see if, in fact, you get some follow through tomorrow. Cree come out with numbers. Cree closed at $27.48. That is traded at $25.90. The stock is quite a mess. Cree had gapped down on April 5th. It went from a price point of $29 down to $23. Made it all the way back topside. Andy Heck, what's going on?
I'm back. What, you get struck by lightning?
Yeah.
Wow.
That was a first, man. Well, I suspect it would have been one of the transformers outside because the whole building went down. And we're in a very large building, and that's the first time that's ever happened.
Oh, that's scary. Did the building shake?
No.
Okay.
But guess what? Our computers are going. So all our UPSs worked, which is a beautiful thing, man. I like it.
That's a good thing.
That's a beautiful thing.
That's a good thing. So I wanted to.
Oh, my hair! Can you see my hair? My hair is all up in the air.
Is it?
Yeah.
I like that. I'm trying to look on my other computer, but I can't get it up. There it is. Yeah, you do look. My hair never is up in the air. Anyway, so natural gas. Let's talk a little,
natural gas. Okay.
Talking the den there.
Let's see.
And I'm kind of liking natural gas here.
Okay.
A couple of reasons: fundamentals and technicals. Technical-wise, I think it's a little bit oversold here after this move down, the latest move down. Open interest has been climbing, meaning the shorts could be back in town.
Okay.
And what I really like is that, a couple of months ago, inventories were 50, 60% above last year's level.
Yeah.
They were 50% above the 5-year average. Now we're down. We're like 12% above last year's level. We're building inventories 43%, 44% below last year. So I think, at $2.60 per million BTUs, even though we looked at $1.60 in March, this thing is still cheap. This thing could have some rally power in it. So I think it's kind of looking good.
When this came back, it came back to where it broke out from on, May 31st, man. It comes back to that 254 area, broke topside. It's kind of a classic.
I think it's a low-risk, high-reward buy here.
Yeah, and, of course, the gas numbers come out, folks, on 10:30 on Thursday morning. So
right. Always an action there.
Yeah.
And they've been trickling in. It hasn't been big injections. We've had we actually had a withdrawal 2 weeks ago.
I know.
Which was very unseasonal. So I think this is a nice spot, to maybe take a little punt here.
Yeah.
With a tight stop, maybe below 250. Depending upon what the inventory numbers come out on Thursday.
Okay, well, unfortunately, I hate to cut you short because that lightning, but guess what? You're going to be on in 20 minutes, man.
I'm back in 20.
That's a beautiful thing.
I'll see you soon.
Thank you so much, man. Have a great one. Have a safe one. Stay there, folks. We're going to be coming right back. Our phone number is 877-927-6648. Dow finished down 84. NASDAQ off 34. S&P's off 8.5. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. So Cree come out with numbers. Cree closed. Well, first off, what Cree does, folks, they manufacture LED LED products. The low for the year is $22. The high's $32. It closed at $27.48. It's trading down $2 right now at $25.80. Numbers go like this. The earnings per share is 19 cents. Their revenue is $388 million. So they're 1 penny short. That's where this was, 1 penny short. Now, if we take a look at the chart on this thing is all over the place. This is just a mess, okay? So it came off a high of $32, has one gap down. Now it's going to have a second gap down. Bring this back. Let's put this back on a weekly. Hold, it's going to be. So this is building cost to break out bottoms of $22 and $23. Let me put this back. Yeah, it's at lows, and it looks like it wants to go after these lows. Pretty intense. Urban Outfitters, URBN. This closed at $31.34. It's trading at $34.34. So it looks that these retailers are off the bottom. You know, this is we must be out buying garbage again. So Urban Outfitters, let's see what they do. These are all retail stores. The low for the year is $19.26. Highs $34. It's trading after the close right now at $34.28. We take a look at this. We put this on a longer term. Put this on a weekly first. This equity had gone from $47 down to $19. Fast, furious, all the above. The $47 was March of 2015, and the 19 was November of 2015. This is pretty cool. So watch what stopped this on its tracks. See, this is neat. So when we came down in 2007, Urban Outfitters had gone from $38 down to $12. Monster volume. Now, all of these 2007, 2008 has huge volume at the bottom. If you want to see something that just stops it on its tracks, though, okay, so in 2007, it was $12. It goes all the way back up to $47, and guess what? When it comes back down, it goes to $19 On a monthly basis, it does 99 million shares. Well, 99 million was going into 129 million as well as 126. So now what you have set up is that now you're going to try to get basically higher into the supply line. Pretty cool, man. Pretty cool. No two ways about that. So that little baby there, there's a few URBN. It looks to me that let's see, RV. You know, these retailers were given up for dead. There's no doubt about it. But what has happened, you know, a few of them have gone bankrupt, and a few others that haven't gone bankrupt are coming off the lows, and they seem to be coming off the lows. And as they're coming off the lows, they have some volume behind the move. That's how they're shaking out right now. We go take a look at good old Google. What do we have with Google? Google out here, down $4 today, 477. We did 1 million shares. Now, Google has a danger point about $10 down. Right now, we're at $801. If Google gets back inside where it broke out from, it's going to be a problem. And that's $790.95. Because the bottom line is that that's where it broke topside, had some decent volume as it did break topside. That being said, though, that's on the daily. On the monthlies, you know, bottom line doesn't have anything. It just doesn't have anything, meaning volume-wise up here. So you can get that type of correction, and you can get it in about a heartbeat. Amazon, of course, has taken over the retail space of everyone's retail space. There's still no sellers in Amazon. What you do have is that when these 13 filings come out, 13 F filings yesterday, you are going to see that you had a lot of funds go in as well as go out. Oh, this is interesting. 8.4. Hold it. Let me just pull this up again. That's the first time I've seen Jeff Bezos sell anything for a long time. Let me say this. So, look at that. So, look, this is pretty crazy. So, Bezos, folks, of course, you know, he hardly ever sells stock, period. I mean, Jeff Bezos owns 17.7% of Amazon. That's almost unheard of for a company. Well, he sold 1 million shares a week ago. And guess what? You sell 1 million shares and you get $760 million. How's that? Wow. Unreal. Let's see who else sold in there. And what happens with Bezos, of course, folks, the way that the 13F rule reads is this, is that if you run a fund and you have over $100 million in it, you have to report 45 days after the end of the quarter whether you bought or sold any and everything, equities. When you own more than 5% of a company, you have to file immediately. So that's why Jeff Bezos, it's 8/4/16, that it was immediate. Now, if we take a look at the largest sellers, let's see, we had Capital Group sold 1.2 million. There's not a lot of big sellers. 700,000, 400,000, 400,000. Buyers, yeah, there's just, when you just ballpark, it looks like there's just as many buyers as sellers. The kicker is, though, there's no two ways about it. When you're talking about a $764 stock, you better not take a big hit on that stock because you're talking about monster money, huge amounts of money, if in fact that hit comes down the pike. Let's go over to the XAU and the HUI. Inside the XAU, what we have is this. XAU is trading at $110.83. It's more than likely going to try to make its way back inside a lower range tomorrow. So the lower range in the XAU would be getting back inside $109.14. You know, we didn't have any volume at the highs, so light volume at the highs, nice extension up, and we did not have any volume on the way down either. You know, so that camp is still out on the XAU and the HUI. There's just been a slow sideways movement. Sideways to slightly higher movement, actually. Inside the Gold Bugs Index, same type of setup. Now, the Gold Bugs Index, to get back inside the lower range, would have to come down to $273.62. Down $2 today. I do expect you're going to go after that tomorrow morning. That's kind of how this baby is set up right now. And the reason I'm saying that is that when you do look at, if we look at Barrick, which is one of the large weighting structures, Barrick was only down 19 cents, but yet you had an expansion of volume. We did 13 million shares. Newmont is the second largest weighting, same setup. Newmont came down 63 cents, had an expansion of volume. When you get an expansion of volume and you don't get a huge amount of price move off a high, that's a deviant deal, folks, because they're pushing it in, pushing it, selling it, selling it, selling it. And then the last piece, meaning the funds, the last piece, whether it's $1 million, $2 million, they just jam it then because they're saying, I'm almost out, get me out. You stay right there, folks. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. So let's go up to Canada. We'll take a look at their S&P. So, and the reason for that, folks, is that we got our man, Mr. Andy Hecht, coming up next. And guess what? Canada, huge commodity country, folks. This indice is also at highs. The high was 14,855. Right now, it's down $73. No big deal. And you know what? This also is going to need more volume to get to lower price. The next leg, I suspect, in order to get to the lower range, it would have to come down another 100 points. It come down 73 points today. If we do go and look inside of this, what you're going to see is that, let's see, so the lead is out here. Oil and gas was up 41 cents. Mag Silver, that's interesting. Let's look at Mag Silver. It's up $1.06. Mag Silver taking anything in yet? This was a company that just kept pushing stock out. Yeah, it's still, this is amazing. You know, if you're in the, I stopped following this a long time ago because it blows my mind. This company just keeps pushing stock out, and it keeps, you know, it's been going, it goes up an amazing amount when the market goes up in general, but it's never generated, it's still an exploration stock, but it has a following. So if you take a look at this for a second, you're going to see something that's just so bizarre. So if I bring this back, what you're going to see is that in 2007, the stock's at $16. It goes down to $3, and now it's back up to $22. And guess what? It's still an exploration stock. Blows my mind. But there's a following. There's a following for it, and then, you know, guess what? You're going to see that thing crash once again. Pretty amazing. You stay right there, folks. Our man, Mr. Andy Heck's going to be coming up, growling a problem with you. And, of course, if you'd like to come to a great workshop tonight, come over to our website at TFNN. Our man, Mr. Basil Chapman's going to be doing a great workshop from 6 to 7:30 Eastern Standard Time. It is for his subscribers, but you can test drive his newsletter right here, right now, absolutely free. The way you do it, you go to TFNN, sign up right in the front page. You'll get 30 days of the newsletter. You're going to get a great workshop tonight, 6 to 7:30. And if you can't make it live, folks, we'll put it on your website. And Basil's going to be going through, number one, where the market is, where he thinks it's going, and he's going to combine that with basically a socioeconomic, different things that are happening around the world right here, right now. And depending on how long you've been listening to TFNN, our man, Mr. Basil Chapman, is no doubt one of the first folks that I ever heard in the United States talking about the Japanization of rates. He was talking about this like 10 years ago. I remember when he used to bring it up and say, what are you, crazy, man? What, our rates are going to go down to nothing? Well, guess what? That's exactly what happened, folks. Went from Japan over to Europe, and guess what? We're still at these lower levels. You know, we'll see, in fact, you know, if our rates have hit a low. You know, what you can expect out here tomorrow morning is a lot more volatility. These bonds look like they want to do an ABC down, and if in fact that is an ABC down, that's going to be one of the first ABC downs that we've seen in a long period of time inside the bond market. The 10-year today did 1.4 million contracts going against a B point. The B point had 1.2 million. Now, it hasn't broken the B, but this is where the danger point comes. When you're barreling into a B point, well, if you're barreling on the way up, it's great. Your probability goes much higher, you're going to break it. When you're barreling on the way down, which we're doing, that is problematic. That's saying the bond market wants to break it. And if you do see that, what you'll get is that, and what's cool about the bonds is that they're going to be trading way before our equities are trading. But if you do get that, you're going to see the S&P lower, you're going to see gold lower, you're going to see the dollar higher. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Stay right there. Man, Mr. Andy Heck is coming right up, folks. Wow! Go get him.